Welcome to the Scaleup Valley podcast, where we bring the best founders and investors to help you scale your business from 1 million to 1 trillion. Today's guest is a very special one. His name is Guilherme, the founder and CEO at Sami. Guilherme, welcome to the show.
Thank you. Thanks for having me. You can just call me Gui. I think it's easier. I go by Gui. So you can go by Gui. That's a lot easier. Thanks.
Very common in Brazil also to go and in Portugal as well. As you know, I'm from Portugal. For the ones who are listening for the first times, the podcast.
Beautiful place. I'll be there soon. So looking forward to get there.
And by the way, Gui is based in Brazil, but of course you will have the opportunity to. It's from Brazil. It's based across the world. Sorry, yeah, let's get to know more about you for the ones who didn't have the chance yet to meet you before. So who is Gui?
Perfect. Thank you. Little intro on myself here. So third-time entrepreneur, all in healthcare. Started my career in finance back in a while ago. This is early or mid 2000s. I worked at an investment bank for a year or so, not very long. But that's when I had the opportunity to see a little bit of healthcare, but from an extreme high level. But I saw how the market worked in the US, especially how the incentives work, how hospital settings worked, and how the mechanisms to incentive either or not clinical outcome for desired condition. And so I understood a little bit of the post-acute care space in the US while I was just following a few transactions, not participating. But it was very clear to me that there was a space in Brazil that wasn't fulfilled. At that time, Brazil was in its infancy of home health care, and you only had hospital and home health care, but you wouldn't have that in-between space where people transition from a higher acute setting, which is the hospital, towards home. But in between home healthcare and the hospital, there was nothing transitioning, no facilities transitioning the patients from there. So that was, I saw a little bit of that when I was in the US. Fast forward, a couple of years later, I like to think I was at the right place at the right time. And my co-founder and my co-founder is a doctor, and I've only had doctor co-founders, which is interesting because at one point, some of the places I go to in Brazil, people think I'm a doctor. So
okay.
far from it. And
by the way, that's a question that I had in my mind. So good one.
Yeah. So no, I'm not a doctor. I'm not I maybe I can play one, but I'm not a real one. I'm not a real one. So I went back to Brazil a couple of years later, and as I mentioned, I like to think I was at the right place at the right place at the right time. And my co-founder was looking at the space, and just being local in Brazil, he was just like, hey, we need a step-down facility. You have home health care and you have hospital, and you have nothing in between. And so his vision was to build something in between. And I had saw what the industry looked like in the US. And I asked him, I was like, are you trying to build a post-acute care network? And then he looked at me with open eyes and was like, what is a post-acute care network? And then I walked him through. And as I walked him through, he looked at me and said, yeah, that's exactly what I want to do. And little did I know, my entrepreneurial first version was coming out, and I was, okay, this is interesting. And I looked at him, I was like, hey, I'll jump into this deal if we're going to build a network of, post-acute care hospitals. But I had no idea what I was doing. Fast forward today, we have 9, close to 10 hospitals in the city. But it's an operation. It's really a hospital operation. And we started this business I don't think with more than, I don't know, 200,000 reais. So that's about, at that time, maybe like, $70,000, $80,000. And so it's pretty rare that you can say that you started a chain of hospitals with that amount of capital, but that was it. So that was it. So that was it.
Well
Um,
then.
yeah. So we just had like this little facility with 19 beds. I remember in detail everything. Took us a year to get the first contract, and to me it was so obvious that thing would work. Me and my co-founder were just, okay, this just makes total sense. But you had to, discuss with the carriers, because they were the ones that were to pay the bill for
Right.
the patients, and it took us, I would say, 1.5 years to get the first contract. First, because I was, fresh coming up, 10 years out of Brazil, and I was coming out, had absolutely no experience in healthcare. And here I was pitching to, big carriers in Brazil saying, hey, we just have this new solution. It's a post-acute care hospital. They didn't even know what it was. And then they looked at me and they're like, who is this kid, trying to build a hospital here? And I remember many times just sitting, really just going to this people's office and sitting in the front and on the reception saying, hey, I need to see someone, and just sitting there and say, I need to see someone. They're responsible for contracting hospital network. And I would just sit there and wait for people. That was,
Really?
I
That's
was,
all.
yeah, that's how me and my co-founder operated in the beginning, try to get those contracts. So it was really sort of a roots experience, entrepreneurial experience, really scrappy, no capital, no sophistication, no nothing, just a vision, and really, really going at it. And I was happy to have a co-founder that understood the clinical aspect of it. And fast forward maybe 2 years, we had this 19-bed facility. And all of a sudden, we had a 19-bed facility that was fully occupied, and we had patients that were, high acuity patients. And you think of, to give you a sense of what kind of patients we're caring for, patients with low immunity, patients with ventilation support, patients with stroke, and multiple comorbidities, patients, oncologic patients, and just very, we're getting sort of a semi-ICU setting type of operation. And we looked at each other and we saw, hey, just this thing seems to be working. I mean, I had no idea from the clinical aspect, but I had a sense of what we're doing from the point of view of what value was in healthcare. Because I skipped this point. When we started, the only thing I knew looking at Brazil was understanding how the hospitals in Brazil were being compensated. And back then, this is 2008. When I looked at how they get compensated, they're being compensated by the materials and by the drugs that they sold or they applied to their patients. And so there was not really a connection of, if this patient became healthy, you got compensated by that. No, it's the more drugs and the more materials, the higher was the hospital margin. It was just like, this just didn't make sense to me. And I just felt like, hey, if I'm a service provider, I should be compensated by the service, especially the outcome of that service. And so that's how we started the company. And that's what I credit today, the success of the company, because I had no idea what value-based pay in healthcare was, but I understood that as a service organization, I shouldn't be compensated by the sicker the patient is, the more I get compensated. I should be compensated by the faster I get that patient home, the faster I get the patient healthier, and the more forecastability in the financial sense I provide to whoever's footing that bill, but combining that with the clinical sense. So that was really the core of the business. And then, so fast forward 2 years later, we were doing value-based pay without knowing it. We had high acuity. Yes, yeah, it's amazing. Like when I look back, it's really amazing because people are still talking about, well, not people still talking. We talk about value-based care
Exactly.
everywhere today, and
it's kind of a trend, a future trend still,
it's a
and
future trend. Yes, yes, yes. You're right. You're right.
not,
Like,
not
I
about
was
2008. It's something that we are still trying to implement, right? And
I was
think
at an
about.
I was at an event in the US earlier this year, and I sat at this massive conference, and they're talking about the same thing. And I felt like, whoa, I think we're 30 years behind here. Something we're still trying to implement that. But I credit that to the success of the company. I mean, uh, uh, we had that vision that could be, transformation for the space, and it really was. So the company now is really good, still participate, fairly active on the company. And so after 2 years, so we had the bags full, and it's like, okay, the MVP, if you can call it MVP, on a hospital setting, we just saw, okay, this is ready. We could expand and so forth. So we went on and built a 50-bed facility, and just with all the capital we had, and from friends and family and fools, and there was just no capital available. I mean, this is not a tech business, but there was no venture capital back then in 2008 in Brazil. All the mindset was a sort of the private equity thing, and you can't value a business like that, so it's really difficult to raise capital. So it's just like, getting friends. You get a couple hundred here, 100 there, and all of a sudden, right, we got into this, like, for us was a big facility for 50 beds, like fully, customized for our business.
Of course.
And our biggest client, at the very same time as we're moving and paying everything, paying the construction company, just delays payment for about 6 months. And
wow.
we were broke, like really broke. Like we just had no cash. Like we're tapped out on the bank lines, just everything. And it was really difficult time because we just could not find capital. But along this period, that when we did a first transaction with a group of former healthcare executives, and at that point we started organizing and structuring the company. But it was at the lowest point when we did not have capital. We're tapped on the bank at all lines. And we had the biggest client that had maybe 50% of our revenues, just over 6 months delayed payment. So that was really tough. So I have a lot of, I have a lot of stories there of how we built that thing. But looking back, it was fun. But it was my first experience in healthcare. And just had a fabulous journey there. Really difficult, really lots of ups and downs. But it was was my first step into healthcare. So I stayed there until 2014, and then in 2014 I left as an executive, and I went on to co-found another business, which was called Dr. Agora, which was I co-founded that with the guys that founded Minute Clinic in the US. If you're aware of Minute Clinic, it was the first what they call retail clinics, and we're trying to do a mix of that and a primary care entry point to the healthcare system. So by then I understood what value-based was. I understand clinical design and how an operation should be designed to be sustainable. Right. And I really understood that primary care could be a really good tool for engaging patients, having a more coordinated care path, and so forth. So I opened that business and had a few investors, US-based investors.
Again, everything that we are talking about today, still how to save costs by coordinating and understanding the patient early enough before going into the specialist, right?
Yeah. Now I go. It's funny because I was in the post-acute care, and if you look from the healthcare perspective, in Portuguese, you say quaternary care, or quaternary care is like the last piece. And then I went on to primary care because I knew if you did primary care well, you have less people on the quaternary care because people get less sick. And so I went all the way to the other side of the spectrum,
Prevention,
in prevention, but understanding how this would have a potential powerful impact. Actually, we had a lot of data from our other investors that were in the US about primary care. So we wanted to set up that in Brazil. And this was a big lesson learned there. The first business, I have to think it was almost like a carbon copy of what we're doing, what the US market looked like and what the European market looked like, because, today we have palliative care, transitional care, and long-term stay for high acuity patients. So we have those three settings, and they are exactly the same as in Europe, and they're exactly the same as in the US. And the payer is always a risk carrier. Now in Brazil, when you look at primary care at that point in 2014, this is it's an interesting journey. When I look back as an entrepreneur, you get some things wrong, you get some things right, sometimes you get things very wrong. And so so when we launched the company, we try to replicate a lot of the success that MinuteClinic had in the US. And there was just, we weren't culturally ready, basically. The company, I stayed on that company until almost 2018, I think. It was 3 years, 3 years. Yeah, we went live in 2015, I think. About 3 years. Yeah. And we tried to replicate the strategies in the US, which was going for lower income spectrum of the population, and having them understand that the primary care would solve a big chunk of their needs, right? And statistically, if you look at a ER setting, roughly 75% of everything that happens on the emergency room, it can be dealt on a primary care setting. So what that means is that 75% of the people that you see on the emergency room shouldn't be there.
5%.
Between 65 and 75%. Yes, that high. They shouldn't be there because of clinical pertinence, right? Meaning you have a sore throat and you just do not have an alternative. So what do you do? Because it's 3 a.m, your throat's bothering you, and you go to the ER because you're gonna get taken care, but you don't need to have that, right? There are other alternatives, and there's from the clinical risk perspective, you as a semi-healthy individual shouldn't be in a place where there's a lot of sick people, right? That's the first piece. The second piece is what the cost of that transaction is. And the third piece is the level of convenience. And so our vision was, hey, we can set up a structure that will prevent a lot of that. And we should sell this to the private market, not to the carrier market. We go to the private and then go into the carrier space. And it would just not get traction. People culturally in Brazil, people are so attached to the specialist care. It's just, you want to go to the specialist and you go to the specialist and you do very basic stuff. So it's highly inefficient for everybody, because if you're thinking of from a cardiologist standpoint, right, the cardiologist should be doing very specific things, and I wouldn't say like very, very critical, but very specific things to his specialty. And at the end of the day, he's doing a lot more of a general clinician than his specialty. That's what happens at the end of the day, I presume. So we felt like people could understand that, but they long story short, they didn't understand. And there was and then we start to talk to carriers in Brazil, and then you remind me of my first experience. It's sort of the death by pilot, right? You talk to these people and they're like, oh, this is cool, we're going to do it. And you never get to sign a contract. Actually, interesting point. At that time, this is like 2016, I was talking to carriers, and this is my big frustration with the space, and actually it's one of the reasons why I co-founded Sami, is because at that point we're talking to all these big carriers and we're talking about primary care, and I had those visions like, hey, if we do care coordination, if you transition your patients through my primary care setting, I can manage a pool of population, I can coordinate this population, and I can lower the cost of providing care to this population. And at that time, and I'm talking about like 2016, it's not very long time ago, and a lot of the traditional carriers are like, no, we don't need that. We're okay. We don't. There's one specific that wanted to do that, and I'll avoid names, but it's just the time to sign something. I died before anything happened, and so fast forward. By the time we founded Sami in 2019, this is interesting. Mike, and this goes well with my frustration with healthcare. I sat with some of the same very carriers that I spoke at Sami, and one specific, one big one in Brazil, just the first thing then they saw me and said, hey, Gui, do you still have the clinics? We really need the primary care. So my understanding of, I don't want to say that my general understanding of how incumbents operate, but, some of the folks, there's outstanding people in the space. Some of the folks, you're talking to them today, 30 years ago, because they're not open to see other things. They're not open to try other things. And the whole structure of the space is set up not to try. They're set up not to take on additional, avoid risk. And there's the conception, it's a half true when you're a carrier, because they say if you open another door, meaning if you contract something else, your cost will increase, period.
Right.
That's the assumption. But you might open another door, and I like to think of my first business, right? Otherwise, my first business would be closed because it was a new door. There was no door like that in Brazil back then. And we opened the door, and to give you a sense, we would save, thinking of the patients that we treated there, the patient moves from an ICU setting and he's stabilized in a hospital. And that patient might cost on a monthly basis, let me think in dollar terms, I don't know, maybe like $100,000 a month. And then he comes to our setting, which is clinically designed for that type of patients. It's socially much better for the family. And yet our cost will go down to, I don't know, maybe $20,000 a month. And so you have clinical benefit, you have social benefit because the setup is much better. We're focused on that patient profile and the cost is much lower. And so we open a door and we reduce cost, and we increase clinical outcome and we reduce cost. But the assumption as a traditional carrier is you open the door and it will cost more, and so they don't take that risk. And so anyways, so we're sitting, this is 2019, I'm sitting with some of the very same carriers, and that's the first question they ask, and I say, I'm glad. At one point when the business shut down, and it was a lot of frustration, and I was like, what am I going to do? And also in Brazil, when you're not successful in a venture, I think things have matured more. But 2018, people are still learning that it's a learning process and not a failure. Right. To me, there was a lot. But at that point I was on the failure side. I wasn't on the, this is a great learning experience. And then you talk to people in the space or the general, the culture in Brazil is just not okay, this is a learning curve. You're moving on to the next one and you're going to try other things and you learn a lot. No, it's just like, this is a failure. Right. And as an entrepreneur, I don't think people, especially people trying to become entrepreneurs, they look at it, they only see like the good things, right? I think I could scare a lot of people with my stories here. I don't want to, but it's just like the reality, it's just a fact of it, right? the first venture was very tough as well, right? I had very tough investors with a very private equity vision, and I don't believe some of those visions are good for culture building, for taking care of people and building something magnificent, right? And we'll go back to that point, and just write that down, Mike. So we go back to the building something special.
Right.
To me, I thought, but at one point, with the group I was just not happy. And so I went on to the second venture and then failed. And for about 6 months, I was just sitting there like, what do I do? What do I do? I failed. And then I was interviewing. Actually, I interviewed with some large carriers because I knew people. And one of those executives, he just came to me and said, Guy, look, you're just unemployable. Get it? You're unemployable as an executive.
I'm smiling, but at the time, I imagine it was a little bit weird to be in those conversations. Right?
No, very hard, because I always went all in on my business. And this is another big learning, for the folks listening. If you're starting something, my biggest advice: do not go all in with your own money, right? And I always went.
Very controversial. Wow.
Yeah. No, this is my advice: don't go all in with your money, because you might see yourself in a situation that, investors. I don't want to generalize here, but investors just don't respect that, and they expect you. The more, I don't want to use an F word, is like the more F you are, the more you're working, the more run down, the better.
Right.
And that's the feeling I had with my previous investors. Literally, that was my feeling.
The less options you have, the most committed you will be. That's their interest, right?
Yeah, and they assume that's in the interest, but what you do to the entrepreneur,
it is not, right?
you're killing the entrepreneur. You're killing everything around them, and you just get to that point.
It's also not taking the right decisions for the mid and the long term. It's just thinking short term. It's survival. It's survival. Right?
Yeah, and so for a lot of investors, that's an assumption that, yeah, that's good. He has no option. He has no money. He's all in. But they forget that, this is not a healthy space to be. And so that was my second venture. But anyways, so go through the motions there, and we got to start something, just connecting, and then I go back to starting Sami. But it was just interesting that, a year later, literally a year later, I was meeting with the same people, and they were asking about, the primary care clinics. And then I was like, are you serious? That's why the sector is so inefficient. There's so much waste, fraud, and abuse, because the people managing this system, they're not up to change. And you have to take risk if you want to change. And to me, at that point, I say, oh, that's good that we started Sami. So anyway, so I'm getting through here the second business and into the third. I'll pause here if you have other questions, or I just start. What is Sami?
No, that's a great one. I've already have, for the ones who are listening, I'm also listening. I already have 4 pages written in the notebook about your story and about lessons learned. Amazing story. Yeah, I would go with the story. Let's go into Sami and get to know more about Sami and where you are today in terms of your fourth venture, which which has raised several amounts of capital in Brazil.
Well, I think the journey starts with just meeting good people, and the first person I met was my co-founder. It was an interesting moment for me, because we were in complete different spectrums of business. He was just selling his last business, and I was just belly up for my previous business, right? And he was in a high, I was in a low, but we had a very similar vision of what, the world will look like with a new solution for the system. I like to think of myself as a mechanic of healthcare because I spend a lot of time understanding how the real mechanics and the incentives worked. And my co-founder came more with the technology view of the space. So here we are, both of us sitting. We met a year before, and we were talking, and I think from his perspective, and this is his words, telling the story. When we met and we talked, and it was like, look, I felt like you could start something from scratch. You could talk to investor. You could pick up the phone to as if you were your own assistant. I don't have an assistant, never had one. I continue to do the same, right? But it was literally go from A to Z. And at that point, as we're sitting, I was like, look, Vitor, I'm done. I have absolutely no capital. I'm zeroed out. And from his end, he had just sold his business and he had a 1-year earnout to go. And he couldn't commit 100% to the business on a full-time basis. And so we sat down, and I mean, but just bear in mind, I knew this guy for like a year, and we're not like the best friends or anything. We met, and it was just a professional conversation. And I said, Vitor, look, I've no condition to put any money up front, and I won't put any money up front because it's just not possible. But it's not that I had it; it was just not possible. It's not that I didn't want to; it's just not possible. But if you want to, put some capital up front, and we'll discuss how this thing plays out as a partnership, and then I'm happy to do it because this is what I truly love, and this is what I know how to do. I know how to get a piece of paper, and from that piece of paper, it becomes a PowerPoint, and that PowerPoint becomes a business, and then there's money, and then you have a bank account, and then you have a business, and you have a product, and so forth. I'm pretty confident on getting those things to play. And meeting Vitor at that time was it was a great moment to meet someone that wanted to do something different and just had that view of building something like a real company, something different. And the idea, as we sat on having coffee, this is 2019, I think. The idea was, I was coming as a provider, being a primary care provider, a post-acute care provider, and a primary care provider. Vitor was more in the industry, working with executives in the space. He ran an event, the health tech events in Brazil, so he knew everything that was happening. But I was more on the mechanical side of this, and my view, which merged to his view, was you can build the sexiest, techiest solution, because we decided. I said, hey, I'm not going to build anything that's asset heavy. And I need to build something that has a systemic vision from healthcare. And Vitor was coming from a technology viewpoint, and we're thinking data analysis, data interoperability, data looking from that angle. But the conclusion was this has to be systemic, and by default, if it's systemic, this has to be a full risk carrier. And why were we doing this? Because in Brazil, I think there's things, those are public data. 21% of the cost structure of all risk carrier in Brazil goes to fraud, abuse, and overusage. 21% of the cost structure. And we felt that, look, if we have a lot of technology here on those three pieces, if we have value-based pay on our network, and we can connect all these dots, we have a chance to lower fraud, abuse, and overusage. And again, you're thinking 21% of the cost structure of all the carriers in Brazil. It's a lot of money. It's a lot of money. But the only way that you can address that, and that's very challenging, is if you're a systemic player. Because if you're the techiest, sexiest solution, you're just one piece on a complete broken system. And you're solving just that little piece, and still you have to deal with carriers that risk averse, you might eventually go belly up because you can't get a contract and so forth. So we said, we're going to build our own. So that was the first piece. And the second piece was, could we make it sustainable? And make it sustainable meant, can we just do value-based pay across the network? And we had a clinical view of how that system should work. And we believed we had the relationships in the space. I had a lot of relationships in the space. Peter had a lot more. I mean, his level of connection is just amazing in the space. And we believed that if we could do value-based pay on all our contracts, connect the dots from a data standpoint, having interoperability of systems, have a mandatory gatekeeper as an entry to the system. When I say mandatory gatekeeper, is having the general practitioner,
right,
family physician, as an entry point to the system, then would have a chance to do something different. So that was the concept that's what we discussed. There was another piece was interesting is in Brazil, we felt that the broker model for the small companies wasn't adding value to the system. We believe the broker system has value in some specific space, but we believe that, on the really small entrepreneur side, we felt that we could sell straight to the end user. And here is not that we could save money, because again, when you look in Brazil, between 8 to 10% of the top line of all the risk carriers, they fall in the hand of brokers. And then again, there are brokers that add a lot of value to the system, and the brokers that have the incorrect incentives, and then that ends up destroying value to the system. And our idea was more important than just, I don't like to say cut the middleman, because sometimes it just makes a lot of sense to use that channel. But it was more of getting close to our clients. And when I say getting close to our clients, just we have to, as a carrier, the way we approach the system, we have to be very connected to our user, because the way we believe is you need to create trust. When you're thinking of primary care, the whole value of primary care, I think that one of the main foundations here is that the care team and the patient trust. If the patient trusts that unity of care, they will always access that. And when they always access that, then you start to explore and gain all the benefits of population health management, healthcare promotion, and prevention. You start to get that, and that takes time. It's not like, hey, here's your care team, and now we're reducing costs because things are more efficient. No, it's not. It's a process. And when you get that level of connection, and so again, when you have a broker model, sometimes data get lost. You don't know who your client is, and so there's all kinds of challenges there. So I'm not even talking about, reducing distribution costs. I'm talking about just knowing who your client is. And that gives you a lot of clinical data. It gives you very insightful data from your members. And think of what Sami is today, right? For example, one of our benefits is Gene Pass, and our members, we can access that data, know if our member is being healthy or not. That is connected to the care team, and the care team can have a lot of insights based on the client behavior. But fundamentally, Mike, what I have, we have a massive success on our digital primary care solution at Sami, but I attribute that mostly from the level of connection that we're able to have with our members. And so they trust that channel. We have amazing people running that operation. We have the technology tools that enable that connection to happen. And so when you're there for your patient the first time, and you're there the second time, the third, the fourth, the fifth, then they look at it and say, hey, wow, this is interesting. So I'm willing to go that channel because that channel is always there. So we were able, as I mentioned at the beginning, we designed that primary care, then we implemented the right tools on top of that. And the result is that today, and this is a interesting data that we have inside Sami, that it's hard to find comparables worldwide. We never found, but roughly more than 50% of everything that happens at our company, all the events, think of a risk carrier,
right?
More than 50, between 50 and 55% of all the events are solved through digital interventions, be that text message, telemedicine, mental health application, mental health interactions. So it's just a big number, and this could be we like to think this could be a transformational approach to the space. And so, I'm connecting all the learnings I had in the past, and then we implement that in Sami. And primary care, once connected to an entire system, is what we have in Sami. Having that level of trust with the clinical team, you're just able to harvest all the benefits of care coordination, population health management, and at the end of the day, lower cost to serve, right? Today, as you go through the primary care, secondary, and tertiary care, today at Sami, our hospital admission rates, they are to the tune of 30 to 40% lower than the industry average. And why is that? It's just because we're doing an outstanding job on the primary care side and in the care coordination side. Are we doing magic there? No, I think we're doing very basic fundamentals of primary care with the right technology tools, and that and having all that data transitioning through the care team, and so they know what to do with that information and have the best clinical decisions for our member. But that doesn't mean we don't mess up our client's journey. That happens, unfortunately. That happens, but in general, we're being very, very successful in our digital first approach to primary care. The results from a carrier standpoint, they're just radically different when you compare hospital admission frequencies at Sami and other, which is the highest cost setting. It's just mean we're keeping our patients healthier in general. You look at our population today, the average age of our clients at Sami is just no different than the traditional carriers, maybe like 1 year younger. So it doesn't justify saying, hey, because you have
they're much younger.
Because your company is a younger company, is a tech company, your clients are much younger, and so they're healthy. No, and actually more important than that, 75% of all the members that have Sami today did not have health insurance before. So when you're thinking of Brazil, a lot of those patients, they were under care before they came to Sami. And so we actually, and that's an interesting, I was mentioning the hospital frequency. This is an interesting data. When you look from lab and diagnostics, we do more exams than traditional carriers. And then like, why is that? On the beginning, we're trying to understand that. And it's obvious if you have a population health approach, is that your patient comes in, you have the health risk assessment, and you look and say, oh, John is an average risk, so we need to investigate. So we allocate more capital on the beginning of their journey. We do more exams, more diagnostic to get them on a sustainable clinical path. And so the result is very interesting. If you look at those two data points, we do more exams than the average in the industry, because we're doing investigative and population health exams to get our members on a sustainable care path. And then we get it. And then when you look at the hospital admission rates, are just radically lower. And so we attribute that to that setup of having the right clinical design, the right team, and the right technology tools to provide our business decision makers with data. And so very, 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 very happy to be in that journey.
very centered in the patient. It makes a lot of sense sometimes that the cost will be higher in the short term, but definitely in the mid and the long term, the cost will be much lower. And as you said, the patient outcomes are much higher, and the quality of life of the member, as you call the patient on your ecosystem.
Oh, it's just to mention something interesting, Mike. When you look at a cohort basis, we look on the 9 to 10th month, we see the cost per patient decreasing. And that has to do exactly what we mentioned, because we allocate capital in the beginning. And so the average loss ratio is higher, and then gets to stabilize, and then it trends lower because we got that member into a sustainable care path.
Yeah. Yeah, I can see. I'm a chronic patient now with an autoimmune condition, and if I would have that kind of care before, I would consume much less resources of my insurance health plan if they would make some preventive measures to ensure that I didn't have any kind of conditions being built in, let's say, in the background in order to explain that. Okay, cool, awesome. That's an amazing story. Thanks so much for sharing. It seems that we need to go into kind of a round two with you, because we have so many topics to discuss. And but I love the way we covered your story and each of the chapters of your story, and that's really amazing. What you have built so far. And can you share some of the numbers that you have now with Sami, for instance, the ad count, how much you have raised it, etc., etc. So
yeah, it's interesting to put in perspective global peers in that sense, right? So we grew faster than all the global peers, name any. We have the best loss ratio, so we're really good at the core business of our company. So our loss ratio is always on the average of 60-something%. And when you look at any global players, they're in the hundreds, the 90s, never been profitable or having operating margin. So we've been extremely successful on that. And just to complement that, from a capital efficiency standpoint, we grew faster, we have better margin, and we deploy a lot less capital than all our global peers. So at this point in time, we raised a little less than $40 million, and we still have plenty of fuel on the bank. Obviously, working on raise is something that you always work as an entrepreneur, but
right.
We're, as far as our global peers, we're just so far ahead. And sometimes we like to reflect if we're comparing ourselves to the companies that we should be comparing ourselves, because we feel that we're building something transformationally different in a sense of the way we deliver care in Brazil. And to give you a sense, our cost structure to deliver that assembles the largest company in Brazil. So we have today 12,000 members at Sami. And when you look at the biggest carrier in Brazil that has, I might be wrong, but between 9 and 12 million members. And our cost structure to deliver care, and bear in mind, we don't own any assets, we have no scale. Our cost structure looks very similar to theirs. The cost to deliver care looks very similar to theirs. And so that's really remarkable that we're able to build that. And when we look at our data and compare it to global peers, then we ask ourselves, are we comparing ourselves to the right companies? Because it's just so different, especially on our core business. We're really good at managing risk, underwriting risk, and deliver sustainable loss ratio for the business, which is, at the end of the day, we're an insurance company, and that's what we have to deliver.
Right. And in terms of head counts, where are you at the moment?
We have about 440 people, and it's divided. The biggest chunk of our team is in the customer success. Obviously, as a health insurance, our business is very complex. So customer success, clinical team, and sales team, that's about 2/3 of the company or half of the company. And then the rest is half technology and half marketing, growth, finance, actuary, and let's just call it the admin. So the biggest piece of our headcount is the operational roles, the clinical team, on the customer success team, and inside sales team. Those are the three big, just for the nature of our business.
Right. Any particular lessons in terms of company building, culture, people, recruiting? If you need to highlight something that was critical to you to start up Sami and to scale up Sami, I know it's a very open question. You could talk about so many things, but if you just think about something that was critical for you to build a successful venture, and that maybe you didn't apply in the previous two ventures that you have built, what would you talk about?
I think the difference this time around was, just having the right co-founder. As my first venture, that just makes the whole it's very different. Having the right co-founder.
Good point.
But very different now, Mike, I have to say. We have outstanding investors, and that changes the way they approach and the way we relate to them and the way we see building a company that takes care of our employees, that really values culture, that values people. And my previous two experience with investors, they were not in that direction by no means. They, as I mentioned previously, it was like, the worse you are, the more, and it was the first time as an entrepreneur that I would hear investors like caring for us, just asking if we're well, if things are fine, and the way we approach problems, the way they support us. So our investor base is just incredible, I have to say. We talk, very often, and that helps a lot. And so when you have that foundation, it just opens up, it just allows you to build something differently. Obviously, having capital helps a lot, but I think that on the vision side, we came to Sami. We came to Sami because there was a problem. There was a problem to be solved. Period. And that was clear to me, and that was clear to Vitor. There was a problem. It's sort of like we heard from one of our advisors, like, you guys are on a mission. We didn't come to Sami because now health tech is sexy. We didn't come to Sami because now there's capital in health tech, and now there's the fintech boom in Brazil. Now we'll go to the next one, and we're all going to make money there. And we came from technology, and this is going to be, which is, there's a lot of stories like that in Brazil right now. And that's not a fundamental way to approach a problem. We came to this from a problem standpoint. We didn't come to this because, hey, there's an opportunity, there's money on the table, you came from technology and we can raise a lot of money, and then you build something fundamentally flawed from the beginning. You can see, I don't need to discuss, a lot of data is public in the space, and you can just look at it, and then you see how people are building stuff. They're not solving the problem. We understood the problem. We are passionate about the problem. And that's the conclusion. Fast forward, almost 2 years later, our results speak for themselves, right? So I would have to mention that, having the right co-founder, have the right investors, and that sets up a base where you feel comfortable, you feel safe to try things, and where people will look at you and say, try things. The worst thing you can do is just sit on a decision and don't take risk. And obviously understanding the risk you're taking, right? And not pointing the finger because you failed on some effort. So having that iteration is I think it's critical to build something, and that sets you up to look at culture, to look at taking care of people, and building something that fundamentally connects everyone. Today at our company, people are really connected to what we do. And I think this is really special. And that just makes me happy every day, or every Monday as we have the weekly on the company, and I come in and say, hey guys, thank you. I'm just happy to be part of the journey. And I think that's fundamentally different than my previous two experience. So just, I have to say, I have great people around me, and that makes a whole lot of difference. Just great people around you. I can't emphasize that enough. If you can organize your, and sometimes you might not need that much capital, but just having that set up around you as an entrepreneur, because it's so difficult to be an entrepreneur. And if you have good people around you, people pushing you in a positive way, not pushing you to the hole, as my previous experience had been, pushing you up and being there for you, that makes a whole lot of difference as an entrepreneur. So I think if I can leave here with a piece of advice, that would be it. Just surround yourself with great people.
I think that we will need to make here an exception. Do you have a few extra minutes so we can go through some of our last points of our conversation? And of course, you are more than welcome to come to a round two a little bit later, because I still feel that there's so much to discuss, and it's impossible to compress all this. And I couldn't cut you through sharing your story, and I think that's the first time
I could go on for hours.
I think it was quite insightful for the ones who are listening to understand the ups and downs of entrepreneurial journey, and that success doesn't happen from one day to other, and in order to keep success, we need to keep paying rent, right? So that's something that it's also very hard, especially for successful founders, successful operators. The expectation is super high that they will be successful again in their next venture, in their next role. And again, more difficult than someone consider you a failure is you to consider yourself a failure. And sometimes people have done great things in the industry, can be very self-demanding and have a huge judgment to themselves. And it's good to understand that the odds are always against us. So only 4% get to 1 million, only 0.4% get to 10 million, and less than 0.04% get to 100 million. Wow. And we are trying to do that in less than a decade, because those numbers are for companies who got there in a lifetime. It's not only just in a decade or in 15 years as venture capital is trying to do it. So let's just cover a little bit of your view on the Brazilian ecosystem and how is it evolving, and also this trend of health tech. You have shared some of your insights on that, but how do you see the Brazilian ecosystem evolving from your perspective since you have started?
I think since I started, it evolved greatly. But I just have that, as having done things before, and that fundamentally but mostly if you're venture backed or if you're starting something in Brazil now, you're doing that for the private sector in general, and you will always end up trying to sell that to a carrier. And I just have a hard time with business selling to carriers. I really have a hard time, because the carriers don't want those business. It's just so hard to get into selling something to traditional carriers. And so I am optimistic in the sense that there's a lot of entrepreneurs in the space. I don't think there's a few entrepreneurs that are there not for the right reasons, and you can tell. It's very easy to tell. It's very easy to tell who's there for the right reasons. And so, things will play out in the future. But I like that there's more funding in the space. venture capital. Like if you look at it, the most active guys in Brazil, they're very active in the space. And I think at one point in the future, there will be consolidation. I think it's natural that this will play out. And I think that's similar to the US. For example, if you're looking at AI, machine learning, and software, some of those solutions being built are just outstanding, but they just cannot get through the door on a traditional care. And sometimes these folks will build amazing solutions designed to address a very clear pain point, but they just cannot get through the door. And eventually players that will have systemic view might find that interesting solution to integrate into their delivery systems. So I feel that there might be some consolidation in that sense. Again, I've met a lot of amazing entrepreneurs in the last couple of years in Brazil, trying to get into the space or already in the space. So I think in general, the space is a lot more active when I started. There's a lot of technologies, new technologies in the space, which is great. But I just don't feel, it's not that I don't feel confident, but it's just so hard when you have a solution selling to traditional care in Brazil. They're so risk averse. And so that's the problem, that I don't think that the system is evolving at the speed that would be possible. I think that's the caveat.
Right.
We could be so far ahead had traditional carriers in Brazil be open to engage, because there's most of them, they have the not the corporate ventures, but the business dev, and then you sit with these folks, and then you have this, as a first-time entrepreneur, you're going to have this conversation. Wow, we got it, we got this, this is done, and the person that you're talking to, they genuinely believe that's true. But once they say, hey, Mike, let me get that solution connected to our system, when you get to that stage, the level of resistance and the pushback from the organization is just so big. And so that prevents our ecosystem in Brazil to develop at the speed that I believe would be possible had these guys be ready for innovation, right? Because there's one thing that, oh no, we have the corporate innovation department here. That's one thing.
Yeah.
But that's not how you do innovation. It has to be something ingrained in the company. It has to be open. And once the innovation department gets that solution to, okay, we're going to connect those two dots here, and then we're going to bring data. Once you do that, you get, the executive, oh, we don't need this. This is going to take time. This is too risky. It's going to cost. It's another open door. And so there's a lot of it's just a basic resistance. And so that pushed back the velocity of how the ecosystem could be developed at this point in time. So I would look at, from that standpoint. I don't know if I have understanding of, for example, the US market in that sense, if startups are able to connect easier to carriers. But in Brazil, I think that holds the system. I think we evolved a lot, for sure, but it could be a lot faster had these guys be more open to implementing innovation. I think they're open to listening to innovation, but they're not on their DNA ready to implement innovation.
Yeah, but I agree that's the same pain point is observed both in the US and in Europe. Also, there are too many solutions that are being sold into the same players, and sometimes it becomes too much to absorb. But in a way, I agree with you. So the system was designed to kill innovation, right?
Yes, I think you said,
and you need to get out of the system. That's what you have built with Sami. Is I will create my own system in order to be able to have the member and the patient in the core of everything that I do. And in that sense, I will deliver clinical outcomes, patient outcomes, better care coordination, a great culture will be able to serve both sides of the marketplace, the people that are serving the patients and the patients themselves, and reduce cost and make it more sustainable as a business model.
Great summary. Thank you for that. I should record what you just said. That's a great summary.
I just repeated what you said.
No, that's lovely. I think the summary is like we went rogue. That's what we did. We said we went rogue because if you sit with the status quo, nothing would happen. And we said, hey, let's go rogue and let's do our own thing, and we'll have a better chance of that. But yeah, I think your sentence there, that the system was designed to kill innovation. I think that's very appropriate to say.
In a certain way, that's what is happening in health tech in a certain way for more and more entrepreneurs that I talk with, and why, for instance, in Brazil, health tech is not at the level of fintech yet, and the same in the US and the same globally. Of course, we are all on this because we want to make part of that. And I'm also covering a lot this season of health tech because I also dream to make that happen. But we need, in order to change the rules of the game, we need to first understand the game that we are playing. And we should not join a game that we can't win. So in a certain way, we need to decide very well what is the game that we can win before we get in, right? If not, we are just one more fighting in a game that we know by default that we will lose.
Yeah, it's just the setup for entrepreneurs dealing with carriers is. I'm not saying you shouldn't do it. I'm just saying you should be aware if that's where you start. You should be very aware where you're gonna plant your seeds and just to get the ball rolling in the business. Like I meet so many guys that we have a contract with this big carrier that pays me a cent per month per member, and they make no money, and they will never make any money. And they're providing solutions, they're providing results, but at the end of the day, that solution might die because the company needs to survive.
Awesome. So let's go for the last segment of the show. Quick question, quick answer, Guy. If you would have the opportunity to have a coffee with Guy at the beginning of your first venture, what advice would you offer to your younger self?
Preserve your relationships more than you preserve your business. I would do that. That would be my first one.
Wow. What are you the most proud of on your journey so far?
Building Sami. It's just incredible. Period. Just incredible. Incredible company, incredible people, incredible investors. And, building something for a country that really needs it. So that's it.
Super well done. Worst advice ever received?
Oh, I have a good one. This one I have a good one. This is when I was building the primary care business. It was, we heard, from one of the guys that were involved in the journey was saying, build and they will come. And that never happened. That really never happened. So I think that's a bad advice. We built and they never came. So we had all those assets and all these clinics, and they never came, and we spent all the capital. So never build, and they don't do that. Or don't write a line of code without knowing what you're solving for. I think that those are the two analogies from on the tech side and on the physical side. Don't build because you don't know if they will come. Right. And from the other side is don't write a line of code if you don't know what you're doing that for. Right? People start, building software and they don't know what the real pain point is, and then all of a sudden you have all the systems that don't work for the solution you're setting yourself to do.
focus on understanding the problem before building the solution, or pick a problem that really matters, right, for people. So, and now let's go into resources. Favorite book?
Favorite book? I'll skip that one. I think I have, sometimes I want to talk about the business book, or sometimes I want to talk something that will be more on the culture side. I'll skip that one.
Got it. Favorite movie or series?
All right.
There is no time for books, neither movies or series in this entrepreneurial journey.
I don't know. I don't know. 2.5 Men. That would be something that gets my mind off the daily grind.
Yeah. And finally, your favorite podcast, excluding this one, if you are a fan of podcasts, maybe you're not.
Yes, I am. No, I consume a lot. I listen a lot to A16Z. That would be one. Yep. But I listen to very different ones nowadays on culture and communication.
Mm-hmm.
But the one that comes to mind, A16Z, is one that I listen quite on a recurring basis.
It was really a pleasure to have you on the show, and something that I really enjoyed is your positivity, your gratitude, your attitude of non-resentment about the past, and gratitude about that past, about the present, and the excitement about the future that you are building in the past. So that's a great example of, for all of us, and even for me, the way we should deal with life, and the way we should deal with emotions when we are going through the ups and downs of building businesses. So thanks so much for that example, and for being here with me and with us in the community today.
Thank you. Thanks much, Mike. Pleasure's all mine. Let me know if we're going to do round 2. Happy to help.
Absolutely. And for the ones who are listening, we keep bringing you the best founders and investors to make your life a little bit easier. We know it's never easy, but of course, as we discussed it today, when the problem matters, when we are really passionate about the problem, we will find a solution for the problem. And that's amazing when we can have an impact in millions of lives of people. See you soon, and keep scaling.